Hey guys, Jack here. Stick around after today's episode to hear how new clients can save 50% on AgYield's full suite of consulting and technology for 2025. This exclusive offer is available now until April 1st. Don't miss out. Terms and conditions apply. Check out the video description to learn more.
Good morning, everybody. It's Thursday, January 30th, and this is the AgYield War Room. I'm Dan Dempsey, and I'll be moderating today's session. As always, if you've got any questions or comments, please feel free to drop us a line in the chat area, and we'll be sure to get to it during the show. Overnight markets here at March corn down 3.5 at 493.5. May soybeans are down. We're down 10 at 1065.25, and March Chicago wheat was up 3/4 at 563.25. This morning we had weekly export sales, solid week for corn, little over 1.3 million. Upper end of the range was looking for 1.8. Soybeans, on the other hand, below the low end of the estimates, 438,000. Low end was looking for 450 there. Wheat sales, upper end of the range, 456,100. Meal was solid at 410,300, and oil was in line at 12,500. Before we start this morning, our thoughts are with everyone in Washington this morning. Terrible tragedy overnight with the plane collision. So we, like I said, thinking about everybody out that way here today. Good morning, gentlemen. We were talking before the show. Justin, I thought you made a great point. We got some markets, we're zipping around. We've got headlines. We've got weather. We've got kind of everything you'd hope for with a little bit of volatility. So maybe a few thoughts this morning, and we'll kick it around the room.
Yeah, just it feels like we're finally in a good balance of bulls and bears out there, and that means everybody's frustrated at some point. So we've added a lot of open interest. We've gotten to some really good areas where there's been change of ownership from farmer to spec money or even commercial longs. So I feel like there's a good balance. Now there's big open interest, so you're going to have more volatility, more bigger moves than we've been used to for the last 6 months or so. I saw people kind of whining about a 7-cent update in corn yesterday. I mean, we're just coming out of such a low volatility environment that the moves are going to feel bigger and bigger. And we've seen this been going on for a while now in like meal and oil, for example. So starting to see in some of the other markets, it's creating opportunities. Overall, really good. Whether you're bearish or bullish, there's opportunities here. So yeah, that's what I mean by we have a market. So it's not, everybody's not loaded one side of the boat or the other right now.
Very good. Ben, what's on your mind?
I agree with Justin. I think we have a market. I think there's going to be opportunities on both sides. I say sometimes I'm a simpleton, but until we start seeing the trend of reducing corn supply, and I don't know that there's a whole full-scale rollover in these markets. I think that there's probably some unrealistic expectations on the really bullish people and some unrealistic expectations for a pullback on the really bearish people. We've taken 3 months to rally, 75 cents. And at some point, there'll probably be a capitulation on one side or the other. And I don't think that the longs are the ones that are on the clock on January 30th. So.
Yeah. Dustin, anything to add?
No. It's like, kind of all kind of playing out right now, right? We've had this really kind of, clear sign on the spreads, going back through October, November, December, things were kind of showing some tightness, and it's counterintuitive, but at the end we did get that rally that we were, that spreads were kind of indicating. Huge rally for corn. So at this point, it's like all that kind of makes sense once we found the stocks number, and we got a little bit of Argentine weather, uncertain planting pace for Brazil. Like, it's like the setup is there for either direction. To Justin's point, like it's a good market. Like there's a lot of conviction on both sides. So I don't think there's anything that really looks way out of line right now in the market. Like we've had a good rally. So just kind of keep that in mind. we need to keep it for the next month. And a lot of the things we're going to be doing on crop insurance and getting security through a combination of crop insurance and strategy, that would just be awesome to see. That's more of a hope than a prediction. So just kind of keep that in mind, is that the biggest risk for growers, in my opinion, especially our growers, are going to be probably going to elevated crop insurance policies, just because I think the value is there. Is that if it doesn't hold in the next 30 days. So there are ways to protect it. We're so close that, it might not be worth spending more money to protect it. But just want to make sure that everyone's kind of clear on when the risks are. I think it's definitely in the next 30 days, probably.
Yeah, I would just add, I do think that, old crop meal, and I've said this a ton of times, so, speaking my bias here, but I do think old crop beans, old crop meal are the biggest risk, because we had huge short covering rallies where they flipped, they got long. Basis levels, cash markets haven't kept up. You saw bean sales today were weak after kind of a week of saying, all these phytosanitary issues in South America, China not taking beans, like maybe it's because they don't need beans. That business didn't switch over to the U.S. Like usually you'd see that and you get a bunch of cargo switch to US. Didn't see that here. So it could just be weak demand at the time you're going into South America harvest. So obviously we rallied with some, Argentine concerns and, shaving the crop off there, but it's still going to be a really big South American crop. And we're harvesting it, and demand seems a little sluggish here. So that'd be my one thing of, I don't think everything's just wildly bullish. We have had tremendous rallies in all these commodities, except for wheat. And that's still the big short. But I would just like to throw that out there. And I hear basis levels of 50 to 70 tons under for meal. So it makes sense that we're trying to be aggressive on meal sales. But, just from a structure standpoint, those could be vulnerable. So I still think those are the weakest ones. I think corn, especially like July forward corn, has some things that still got to figure out with, like we've talked about, Argentina, Safrina, next year's acres here. So the fundamental story, I think, is still much stronger for corn. Maybe starting to develop in wheat, especially with a big short. But that's kind of a value play in wheat, in my opinion. Corn's already got tight fundamentals, and you got to protect it from getting tighter.
As you guys look at, we haven't talked about it here for just a little bit, but like the corn bean ratios, we're heading into February. I mean, any opinions there? We're going to argue if we're going to get, more corn, or what the farmer's mentality is going to be here, and certainly that'll be price dictated. I would assume a little bit here, but what's your thoughts there?
My thoughts still, the ratio's at 2.27. I think the long-term average is like 2.35. So like we're not dramatically below that. I think a lot of people just written down a bunch of a lot more corn acres because that's kind of what the market needs. I don't necessarily think it's priced that. I think new crop corn's going to want to stay at this ratio or lower to try to ensure that we do get the acres. So, it'd be different if we talked about this a lot, but it's flat price and ratio. So when you're in really good profitability with a low ratio, like you get a lot of corn acres. When you're break even or below at a kind of a normal or little low ratio, I don't think it's a no-brainer, especially with how much money you have to borrow to plant the crop, all the things we've talked about. So yeah, I think it's debatable. I mean, I think you'll get some more corn acres probably just from a rotation, but like we talked, the I states, I mean, we're pretty good rotation for most growers. There's not a ton of switching where a lot of people go back to 75, 80% corn on corn, unless there's a dramatic price signal, and we're not dramatic by any means.
Right. And I'm not hearing really much of a reprieve in cost of production. I mean, guys are still working in the I states over $1,000 an acre roughly. I mean, are you guys hearing anything different?
It's high for sure. That's why we think, cost of production, numbers $4.80 to $5 at AgYields easy. And these are cash prices, right? So anything that's going at harvest is going to just have an extra uphill battle to get above break even for not getting the yield. I will say that there has been a lot more excitement about corn on corn that I've just heard anecdotally. And, so I do think that we start to get into the higher fours or maybe even up to $5 that we could get to 95 million acres of corn just because the wind is in their sails, right? And I think mood does play a lot to that, right? Like, are we trending higher or trending lower? Because it's a kind of the hopes and dreams that seem to dictate some of these excess acres years that you're not expecting it. That said, I think I agree with Justin completely. We still have to prove that. I don't, if corn all of a sudden is falling back to the lows here prior to the planting window, I think it's going to be really hard to keep the high corn acreage numbers. People are doing balance sheets.
Yeah, I guess that was my point, Dustin, is like, yeah, absolutely. I think that might be the job of the market, is to make that happen. It doesn't just happen because we want it to. So if you fall back 440, 450 in crop insurance, then you go borrow a bunch of money on a crop that's underwater and tell your banker that you need an extra $1 million because
It's gonna be
you're pretty
tough.
bullish new crop corn,
Right.
Yeah.
And that seems to be like the 2023 is a good example, right? We had, huge acres, and it was because we had a 591 spring insurance guarantee. Even though prices fell apart after that, I think that was really the kind of, nail in the coffin to get such a high corn acreage number.
Crop insurance is a huge part of that ratio.
Right. So, you look at 23 acres being really strong corn on corn, and that was a 591 price. 2024, we kind of had that opinions like, well, let's go start getting more aggressive on bean hedging, because it's really not the incentive to plant a ton of corn acres at that price point. And we, huge head fake on the June report. The survey was off by a decent amount. FSA acres confirmed that they really did plant corn acres, more bean acres when that started coming out post June 28th report. But by that point in time, we had a couple things that were just super negative for corn. We had good weather, and then we had, the obvious carryover problem where too much corn was stored unsold going into August, and it just completely killed the market into August. And that was right at the time where funds were just coming out of their record short position in July. So it wasn't August was a pretty weak time frame. Obviously, look at where prices are today. Maybe it shouldn't have got that low. Maybe it was just the carryover of old crop that caused that. And, where do we, if the pendulum is swinging too far in both directions, 23 and then 24, where is that middle ground? I think that's the big question for everybody. Where's the sustainable price for global corn prices? I think that's where we need to probably trade into for a while.
Yeah, very good. Any other parting shots here this morning as we move on, guys? We're good. All right, Rye, we had a pretty healthy pullback yesterday in cattle, and the back end of hogs continue to inch closer to new contract highs. So any thoughts here this morning?
Yeah, I mean, it just, I think it was about time. We've been straight up for a couple days, got a little bit of a setback, and here we are again. Beef prices were a little bit lower. I mean, open interest was up 917 contracts, so I think that was a little bit of a surprise. It wasn't really a liquidation kind of break. So overall, it does look like you are seeing some new selling coming into the market with some of the opportunities that we're seeing out here. So that shows that I think we're in a pretty healthy spot, but cash market's been slow. It looks like there's been a little bit of 204, 205 trade in some areas in the South, but overall, the bulk of the asking prices are going to still be around 210. So we'll see how that kind of shapes up. We are coming into the inventory report tomorrow, so that's going to be kind of an indication where we're at in the cattle cycle, if we're expanding, if we're contracting. So we'll really want to pay some close attention to those numbers, just because right now the back end of the market, is still relatively flat here. So I think that's going to spark some movement back there and some volatility, but it's not going to do much, I think, for the overall sentiment to the front end of the market here. So right now things are still tight, but it feels like if the beef market really starts to fall out of bed for whatever reason, it's going to give the packer a little bit more of a problem. So I think all eyes right now are on beef and that kind of performance for the near-term direction. So, and on the hog side of things, new highs for the move yesterday. We're seeing a little bit of a setback in cash, so it just seems like we weren't able to finish in the green here. But overall, the sentiment has been pretty positive. We've been seeing carcass still kind of make new highs here for the move at 93.31. Belly's kind of leading the charge up 369. So we would expect that trend to kind of continue. Just a matter of how far we're going to be kind of putting the cart before the horse a little bit, but seasonally it does feel like we're kind of in the throes of more kind of positive positive trend and positive demand sentiment. So we'll see how that all kind of shakes up. Wouldn't be surprised to see a little bit of weakness just because it has been a good rally, but overall, I think the trend is still pretty positive here.
Very good. Appreciate the update there. We're just coming into the open. We got March corn down 3 3/4 now, 493 1/4. March soybeans are down 10 3/4, 1049 1/4. And March Chicago wheat is unchanged, 562 3/4. Jack's got some information in the outro. Be sure to stay tuned. We're running a special offer here through April 1st. I know we've talked a lot about crop insurance, the need to do a little deeper dive this season. Give us a call. We'd love to go through it with you. We've got some real aggressive pricing to use our services for the next year. So give us a shout. We'll talk through that with you. Appreciate everybody that tunes in on a daily basis. If you wouldn't mind, throw us a like and subscribe. It'll keep you up to speed on everything AgYield. And again, thanks to everybody that supports the show. We're doing this live every day that the markets are open on X, Facebook Live, and YouTube Live, 8:15 Central Time. Appreciate the thoughts and comments here this morning, guys. It was a good show. We look forward to talking to everybody tomorrow. We'll have Brian in for Fun Fact Friday. It's everybody's favorite segment to go into the weekend. So again, have a great day. We'll talk to you tomorrow.
At AgYield, we know that farmers are constantly confronted by new challenges, and 2025 is no exception. Markets are volatile, margins are shrinking, and lender confidence is in free fall. Farmers need industry support now more than ever, which is why we are offering something truly unprecedented. From now until April 1st, new AgYield clients can access our full suite of consulting services and cutting-edge technology at 50% off. This is more than a promotion. It's our way of extending a hand of support to farmers when they need it most. From precision grain marketing to innovative risk management strategies, we're committed to protecting your farm's profitability and building a stronger, more sustainable future. And together, we can weather the storm ahead. Visit us today at agyield.com or call 855-266-6241 to get started. Terms and conditions apply. Check out the video description to learn more.